Hi, I'm Timothy Pope and this is the Shanghai Finance Update. Chinese mainland stocks smashed another record today, recording turnover of 3 trillion yuan about an hour before the market closed. Turnover blew past 1 trillion yuan in the first few minutes of trade as the Shanghai Composite Index surged 10% at the opening. But it didn't stay that high. I don't think we can exactly say investors were feeling cautious today, but they were waiting to see if this morning's press conference by the National Development and Reform Commission would add anything concrete to the broad policy announcements already made and the staggering stimulus measures announced before the National Day holiday. That didn't really pan out. The Commission was definitely making positive remarks but didn't go into specifics. That caused the markets to lose a little steam from mid-morning onwards, but the Shanghai Composite Index ended up 4.6% and the Shenzhen component added 9.2%, so the rally is still going strong. We're still seeing record numbers of people rush to open stock trading accounts, a lot of them younger people too, according to the data. But what isn't clear is how many are looking to invest for the long term and how many are just looking to make a quick buck trading on the current hype. And that's going to be key to this rally's sustainability. Investors are focusing heavily on thematic sectors, which the government has been favouring in recent policy announcements. Sub-indexes tracking semiconductors, biotechnology, defence and electric vehicles all had double-digit gains today, as did stockbrokers. And that's being helped along by a lot of predictions coming from Wall Street's big players. Goldman Sachs is increasing its exposure to Chinese markets, saying it expects a further 18% upside on A-shares. A lot of the comments I've seen from analysts and investment managers over the last week or so talk about calls that they're getting from clients about increasing their China exposure. Fund data provider EPFR says that between September 19 and 25th, foreign index investors pumped $1.8 billion into Chinese equities, and the vast bulk of that would have occurred in just 2 days. We're also seeing investors look for China exposure on their home markets. One good example is Australia's mining stocks, which are heavily influenced by China's demand for iron ore. Many of them are up double digits since the stimulus measures were announced.